Now let's do one thing. Let's talk about the sector that will be in spotlight starting next week. On the 12th, we have numbers from HCL Tech and TCS, and the day after is Wipro's turn, and of course after that Infosys, and then the all mid-cap IT ones. But Rima, why don't you talk about what's happening and what to watch out for in terms of the numbers?
Well, I think it's a consensus and it's a given that Q1 is going to be very weak and subdued for the IT companies, and Q2 is also going to be low. I think that's priced in. But where there is still some amount of debate is H2 of FY24 and FY25. Are we going to see a rebound? There are many brokerages like Morgan Stanley, JP Morgan, Jefferies, who believe the current consensus expectations for this year and next year are on the higher side and will have to be brought down starting the current quarter. Also, especially since these stocks have seen a very strong rally. If you could just get that played up, and you would see large cap IT names have seen a rally of going up to 15%, and some of the mid cap IT names like Cyient, Birlasoft, from their post Q4 lows, these stocks have seen a rally of 35 to 38%. In fact, names like Tech Mahindra, HCL Tech, Birlasoft are very close to their 52-week highs, just about 2 to 3% away from that. So the bears in the camp believe that this rally that we've seen in the last 2 or 3 months is not backed by fundamentals. The demand environment is still very weak, and we will see earnings downgrades. But then there is also another segment in the market who believe that the deceleration in revenue has been priced in, and the deal wins announced by the companies have been strong, even in the current quarter. You've got TCS, which has announced a $1.8 billion BSNL deal. There has been a Phoenix deal, a Morgan Stanley deal. Infosys announced a very large deal with a Nordic bank. So they're saying that the strong deal wins will fuel a rally or fuel a pickup in earnings in H2 and FY25. And plus, there is a bit of a tactical trade. So many people in the market were saying that, valuations have run up in all sectors, barring the IT space. So if you want to put your money to use, maybe there is some tactical comfort in putting it in the IT pack, just because the valuations are not as expensive as it is in some of the other pockets of the market. So Andrew, I take the point that, the first